In the beginning, you don't know what it is. So to teach yourself how to grow in your understanding of where to aim for each day, what is it more likely to aim for? The previous day's high or the previous day's low? And or the day before it, high or low? Or the day before it, high or low? So in other words, you're looking at the high and lows of the last 3 days. That's exactly what I introduced first on Baby Pips. If you use those 6 levels, okay, it's 3 highs and 3 lows, which one has been traded with a fair value gap? The one that creates one or trades to it and creates a fair value gap, and it allows you to move in sync with what you thought was going to happen for the weekly. Like, where is it going to go on the weekly chart? Is it likely to expand mostly higher, or is it expanding mostly lower? If you're trying to focus on shorts, okay, it would go without saying that you're going to try to see a move to yesterday's low, or the low prior to yesterday, or the low 3 days ago. And using the 10 o'clock to 11 o'clock, or the 2 o'clock to 3 o'clock, or 3 o'clock to 4 o'clock, or 2 o'clock to 3 o'clock in the morning, or 3 o'clock to 4 o'clock in the morning, or 7 o'clock to 8:30 in the morning. All of those are opportunities for you to look for that simple silver bullet model. Over time, with experience, you're going to determine that every single hourly candle can be traded and treated the same way as a daily range, because everything is fractal. And by aiming for the previous hour's high or low, framing it with that mindset, you can start getting high frequency trading algorithm entries using a silver bullet model for a 15 or 30-second entry or fair value gap. So I could literally talk to you for the rest of today and still not really scratch the surface of answering it, in my opinion, the most significant manner of responding to what your questions ask. I understand what you're asking, but there's a plethora of examples on how to do that, and I just gave you new ones here just in a couple sentences. It's a matter of finding the one that fits you. That's why there's so many things that have to be brought from your own personal perspective and your personality into trading. Can you be in front of the charts at that specific time? Can you trade a setup that would not look like everything else I've shown so far? Because I do other models, and like I have a video that's been rendering while I've been here with you live. I'm gonna upload it here in a moment, but I'm teaching a new PD array in there, and what I actually traded yesterday in non-farm payroll. So if you understand that you are given the opportunity to bring your personal perspective, your personality, and how you are going to allow your trading to be form fitted with the concepts, not take the concepts and form fit it to you. You have to bring your personality to it. You have to allow whatever it is that makes you feel comfortable looking at price and how it invites you to engage with it. I have so many concepts, so many ways to get in that same scenario, but you just have to determine what it is you're trying to do. Are you a reversal trader? Are you a contrarian trader? Do you like to trade with trends that just have been obvious for a long period of time on the 4-hour and daily chart? If you know that it's likely to go down to a level that's 200 handles away for an index future or 300 pips for a forex pair, if that's what you're really focusing on, like if that's what the whole model is based around, and you have the commitment to hold for something like that and stay with that idea, then using any time frame less than an hour, you can do a 15-minute fair value gap with the silver bullet mindset. Silver bullet is not simply a matter of limiting it to a specific time. All I've done was take very specific generic times where order flow is going to be one-sided. That's what's occurring there, because the algorithm is going to start spooling and delivering price one-sidedly. And because its nature is to perform that way, if you look for a fair value gap in those specific time windows where the beginning and the ending of it is, it can't hide from you. It literally cannot hide from you. It's a matter of you knowing what you're likely to draw to at that given time of day, whether it be London, PM session, AM session, it matters not. But you have to warm up to the idea of whatever it is you're trying to do, any one of those particular times of the day, that's where you should bloom, where you're planted. Plant yourself right there and say, okay, I don't care what ICT and the rest of his crew does and what their trades. I don't care about that. I don't care what new PD array or what model I release in October. I don't give two spits about whatever I talk about in the future in a book. I'm trying to nail down one thing so I can start getting good at doing one thing right now. You start with when can you get in the charts? Because if you can't figure that out or determine and settle in on that, nothing's going to work for you. But once you settle in with that, then you have to determine, okay, where's the likely draw on liquidity? I mean, that's the whole basis of what it is I'm teaching. Because if you can get to that, and you won't always be correct, are you in a state of mind that allows for that imperfection? Because many times in the beginning, people don't want to accept the fact that they may be less than 50% accurate. And that's normal for someone that's learning a new skill. And over time, you'll get to that 50-50. And eventually, over years, you'll get to 70 and higher. But you'll still have losing trades. And you'll be in a time when you think that you know where the market's going to go, draw to. I'll give you a perfect example. I was very confident yesterday that the gold market was going to sweep out that low. I literally told my youngest son, I said, I think that it's going to take that low today. And you don't know this until me saying it, but I was wrong in his eyes. He watched me say something and outline something that didn't come to fruition. So do I throw out everything because that didn't pan out? Do I tell him, well, don't worry about learning this now because that one incident where I did it wrong, my expectation wasn't seen in the delivery of price, the model therefore should be thrown away? No. So I don't know how you engage price. I don't know what it is that you're specifically looking for and how you have been trying to frame bias and where the liquidity would be for the silver bullet to even pan out. But silver bullet is just a way for me to describe a return to a very small, insignificant piece of price action that's easily identifiable, which is the fair value gap, on a very, very small time frame during a time when it's going to run for 15 to 30 minutes minimum in one-sidedness in price delivery. So really, if you understand what I just said, there is lots of silver bullets throughout the course of a 24-hour period. And if you're using seconds charts, like 15 seconds, 30 seconds, man, there's dozens of them every day. Dozens of them. And the only thing I've tried to do is limit your focus because so many people have a hard time trying to figure out, well, I don't know what setup to do. I don't know what PD array. Okay, forget that. Here's the PD array. Here's the one little thing, that one little cog that you have to use. Focus just on this. But only look for it between this beginning time and this ending time, and practice with that until you get really, really good at doing that one thing. Some of you will never want to do anything else because it makes you your money. And that does not mean you failed. It doesn't mean you're a subpar student. It doesn't mean that my other stuff doesn't work. This means that you've discovered yourself and you've discovered what works for you, and you're content with enough. Because with enough, the heavy lifting's done with money management. You can take a small little cookie cutter approach, very simple, small little idea of what I've taught here with Silver Bullet. You can turn that into a fortune. It's all how you manage the money and you submit the time. I literally was telling Cameron this the other day. I said, when you swing for the fences and you're trying to do your model, what you are messing up with is you see how when it starts to run real quick, you take the limit orders off. And you think it's going to keep running and go like 200 handles. And you abandon the easy objective of getting to your target, getting paid, and moving to the sideline and letting yourself be content with, I made this work for me. And then learn by experience that this is how many times over the course of 3 months, 6 months, a year, this is how many times I did that very thing. And yes, 50 to 100 times more, it went way beyond where I got out at. That's encouragement that you were doing the right thing. But until you do something and get a measurable baseline and prove to yourself that you can be disciplined doing just that, you won't get to these big grand slam home runs where you're doing the full daily range, because that's what he wants to do. He wants to catch those big moves, but he's trying to skip over something. So I'm taking a great deal of liberty, and I'm trying not to be offensive in replying to you. I don't know what you've done, and I don't know how you yourself, and please don't be offended by what I'm about to say, Kit, or anyone else that's listening. I don't want this to be one of those sit down and ask, dear Abby, like I'm gonna have a one-on-one mentorship with you in 5 minutes now. Because first of all, we won't get through anything, and it'll alienate everyone else that's listening. But I'm trying to be inclusive, so that way everyone that may have a question or something similar along the same vein, you have to have a target. You have to have an approach. What are you framing the draw on liquidity? Are you using a day where you think that it dropped early in the day, but eventually it's going to have a higher close or a higher high in the day? Okay, then that sets the framework for you probably avoiding the morning session. Don't do anything in the morning session, and set your sights on the PM 2 o'clock to 3 and or 3 to 4. There's a silver bullet in there. Okay, it's going to be there. But what are you going to be aiming for? In that case, if you thought that the morning session drop was just the making the low of the day, and then the PM session is going to just expand, going higher, going into the close, well, it goes without saying that you're going to be looking for expansion in the afternoon. So what would you be looking for? Well, was yesterday's high higher than where you've traded today intraday? If it is, that's what you aim for. That's your draw on liquidity. And if you're using that as your basis, okay, wonderful. You're looking for 5, 10, 15 handles, whatever your silver bullet target is. I don't want to try to force it into just only being 5. But in the beginning, I believe everybody should be striving for just 5 handles. Because if you can consistently prove it to yourself that there's a probability behind it, and it's measurable that you can do it if you commit yourself to it. And then you have a track record that you journaled. This is what I thought was going to happen. This is where I entered it. This is where I framed the risk. This is where I tried to get out at. And this is how many times it panned out for me. And this is how many times that it didn't pan out for me. And I'm still going to stick with it over time. I'm going to get better at it. And then after a while, when it's comfortable for you, but not in a hurry, don't be in a rush to do it. Go from trying to aim for 5 to 10 handles, and then live there for a little while, a couple months. Don't try to force it, because you literally can change the entire trajectory of your life. Much like going back to what I was saying about my son, I said, Cameron, when you look at these trades, you don't realize that what you're doing, a couple $100 here and a couple $100 there per day, like they're the building blocks of you having something that's going to yield thousands of dollars per day, thousands of dollars per trade. But you have to allow for that to finally settle in on you. And you say, okay, well, I'm not going to be fearful. I'm not going to be in a rush to chase that price run. I thought it was going to go up that level, but I wasn't ready to take a trade. But now it started running and I missed the entry. So let me just get in and get on board right now, because I can get those 12 remaining handles or pips. That's the mistakes he's making. So he's demanding, he's absolutely precise, and he has to know exactly how far it's going to go. And that messes with everybody in the beginning, no matter what you trade with. You get caught up in the excitement of that price action running, or you think it's running, and then when you chase it, it pulls back on you and it crushes you. Because he only has $1,000 daily max drawdown, he still is trying to do 2 contracts when I've told him 1. I don't know if you're doing that either. I don't know if the other listeners that would have an opportunity to sit here and say something, would they be honest and say, yeah, I do that too? Or are they not doing it? Is it something else? So there's a lot of things that would, create the difficulty for this. And that's why I talk a lot, because I try to cover all the things that I could imagine where I went through and what would arise by me saying what I just said in either a Twitter space or whatever I've talked about in a recorded lecture. I know what would be prompted most of the time by me saying something or touching on something. And I also know that I won't have the sufficient time or bandwidth to talk about it sufficiently enough to satisfy, so I don't touch it there and I'll treat it as its own individual topic. So I say all that to say that I don't know if I can adequately answer you in a succinct manner where you'll feel satisfied and feel like you've got something from it. The only thing I can tell you is keep working with some of the things I just mentioned here and what I've already taught and what I teach on in all the other videos, because it's not like there isn't one recipe that's going to fit you. And that recipe that you find profitable, if you try to put it in the hands of 12 other people, the likelihood of you having 3 others do it just like you and finding satisfaction in it is highly unlikely. It's highly unlikely, because everybody's going to bring their own personality to it and what you're willing to do. And some of you you're built in high rollers. Like you want to be a high roller. Like you want to be, another Tom Hugard. Like you don't give a shit. You're just going to swing for the fences, and you'll deal with the drawdown, and you'll figure out how to fix it later on. But right now, I'm trying to do as much as I can every single time I get in front of the charts. And others are going to be very timid, and they're going to be like, I really don't want to risk a lot, and I'm okay with getting there over 10 years. So it's a very complex thing as a teacher to try to provide a very detailed roadmap. So what I do is I present different approaches how I can use the information to try to help you specialize on what it is that you're trying to do, whether it be an intraday scalp, whether it be a day trading where you're trying to do the full daily range. All of that is silver bullet. It's just a matter of where you're placing it and what you're aiming for. And I've done a great deal, like for instance, the one model for life teaching. That teaching right there, if I had that in the first 6 months of my trading, I would have avoided blowing out at least six not contracts, real accounts. I would have avoided doing that very thing because I didn't know what I was doing. I didn't know what I was aiming for. I was trading for targets within a pattern that I believed was in price when they weren't. It wasn't there. I was being confused and led astray by the chaos of price action structure versus this is where liquidity is. This is where inefficiencies are. And where are those times of the day that liquidity would be considered impactful? That lesson that I gave in that, it's not a model of specific trading. It's a model of determining how you go in and you look for the liquidity that's mattering right now. No matter what time of day, whether you go in the London session, the morning session of New York, or the PM session, I taught you, and you see me going out there doing it with a real account. I go after very specific elements of liquidity above or below the marketplace or inefficiencies using the very logic that I taught in that lecture. So I guess the easiest direct response would be the way you improve is use the logic that I